Hello, everybody. My name is the Saubrey Boyz Walefatshe from TBR Solutions. I'm sure by now you know what TBR Solution is. The R stands for all the English positive words that starts with R. You name them, reading, one of them, research, one of them, results, resilience, relationship. All right. Now, you may ask, why the big R? We are saying if people follow this principle, these are our principles, they can solve whatever problem, especially of the financial nature. I've already indicated that my name is the Saubrey Boyz from TBR Solution. I've been announcing for some time now on social media that I'll be having GPF to explain this monster GPF. It's not a monster per se, but it's a huge organization, a gigantic organization, because it's dealing with your pensions, guys, your funds. But we need to understand so that when we interact with them, we know exactly where to start and where to go. Now, I'm very grateful to GPF that they've given me the head of Actuarial and Benefit Administration, Mr. Brian Kariza. He's going to be my guest today, who's going to share a lot of knowledge with you so that from now on you understand where to start, where to end, and your expectations so that it can be managed properly. Mr. Kariza, thank you very much and welcome to accepting our invitation. Will you kindly greet the viewers?
Thank you very much, Saubrey, and good afternoon to our viewers. I'd like to thank you all for taking the time out to watch this video, and thank you, Saubrey, for the invitation. We welcome every opportunity we can get to help our members understand how the GPF operates better. As Saubrey indicated, my name is Brian Kariza. I'm the head of Actuarial and Benefits Administration at the GPF. Thank you.
Brian, just a brief. Who's Brian? Where does he come from? Where, you know, you talk about actuary. Those are big words. So just give us your qualifications, if you don't mind, just to share with them. And then anything that would like to share so that people understand who's Brian Kariza. Like I started to explain what the big R is. Well, GPF has been there for years. People understand what GPF is. So we have to explain what the big R is. So do you mind to explain what's Brian? Who's Brian Kariza? Where does it come from and all those things?
Okay, thank you very much. I'm an actuary by profession with about 10 years of experience in the financial services industry, mainly in pension fund valuations and pension fund consulting and administration. I did my studies at the University of Witwatersrand. That's where I completed my BSc and my honors degree in actuarial science and mathematical statistics. I've got a passion for education and mathematical based learning, and this is what led me to the path in actuarial science. And funny story is I'd never envisioned myself working in the pension funds environment. I think while studying, I leaned towards insurance, but my first roles were in the pensions industry. I started working at Alexander Forbes Financial Services industry, financial services, and that's where I got exposure to the pension funds industry, and I have not looked back since then. My main role currently is to provide oversight of the actuarial and benefits administration function for the GPF. So these are outsourced to external parties, but I'll touch more on that when we get into the other questions.
The first question, thank you very much for that. The first question, what is GPF? What does it do? People want to know, what is GPF? What is it? What is this acronym all about? Can you just explain a bit?
Okay, thank you for that. The GEPF stands for the Government Employees Pension Fund. The GEPF as a fund was established in 1996 through the amalgamation of several different funds which existed before then. And they were all joined into one fund which became the GEPF. So the GEPF is a defined benefit pension fund. And what we mean by that is the benefits that you get as a member when you leave the fund are prescribed by certain formulae which are in the rules of the fund. So you're able to estimate your actual benefit. This is in contrast to a DC fund where whatever you get when you leave the fund is what you've contributed together with the interest that it earns. So the GEPF pays several benefits when a member leaves the fund. So if you stay up until retirement, you get a pension that is payable to you for life. And if you have a surviving spouse, that pension continues to that surviving spouse and any surviving children that you have up until the maximum child pensioner age. However, those are not the only benefits that are payable. So as a member of the GEPF, you contribute at 7.5%, and the employer also contributes for you depending on whether you're a services member or a non-services member. I think currently they contribute at a rate of 13% for non-services and 16% for services members. And what these contributions do is for each period that you contribute, you're earning a benefit, and this benefit will be payable to you ideally when you reach retirement age. However, we do know that people do leave before retirement. So if you resign, you're entitled to a benefit, and the GEPF provides a benefit on resignation. If you unfortunately pass on before you reach your retirement age, your surviving spouses receive a pension, or depending on the years of service that you have at the point at which you pass on, your surviving spouse will receive a pension or a lump sum benefit. So the GEPF provides different forms of benefits at different points in time. And the main purpose is to provide pension benefits to ensure that our members have an income once they have stopped working.
Now, let's clarify this. Let's clarify this, because I want it to be explicitly. When the member, which is the one who's a member of GEPF, let's say he passes on, the surviving spouse get the benefits. That benefit is equivalent to what the member was getting. One, if let's say the member was earning 30,000, the surviving spouse will get 30,000, or what's happening there. Now, I want you to be clear here as far as this is concerned. The children, are they going to benefit until they are, as old as Saubrey at the age of 55, but I'm still a child of the former principal? So I just clarify that.
Okay, thank you for that. I think we need to unpack the question because there are two different instances to look at. So let's start off with the death of a pensioner. So someone who's already retired and was receiving a pension. So when you reach your retirement age, you're entitled to a guaranteed pension for 5 years. What this means is if you are to pass on within those 5 years, the payments will continue to your surviving spouse at that amount that you're earning and subject to any other pension increases that you will get. So using your example, suppose as a pensioner, I passed on and I was earning a pension of 30,000 a month. So for the remaining 3 years, my surviving spouse would be receiving the full 30,000, the full payment of 30,000, obviously subject to any pension increases that might be guaranteed then. However, at the end of that guarantee period, depending on the option that I've chosen for my spouse. So there are two options. It's either you choose for your spouse to receive 50% of your pension on when you pass on, or they get 75%. But if you choose the 75% option, it means you're reducing your current pension as a pensioner. So going back to our example, if the default option of 50% was chosen, at the end of the guarantee period, the surviving spouse would now receive a pension of 15,000 and not the 30,000 that was payable in that guarantee period. Continuing with that example, if as a pensioner I pass on after this 5 years has elapsed, so if I'm receiving this 30,000 pension, but it's already after the 5-year guarantee period, my spouse would not receive the full pension, but would receive the 50% pension, which would be the 15,000. So what I've described is the for death of a pensioner. Now let's look at the case where an active member passes on whilst they're still in service. So they haven't yet reached retirement age, but they pass on. So remember what I said initially. I said when you become a member of the GEPF, you contribute, and for each period that you're contributing, you're actually earning a benefit. So it's only fair that when a person who passes on and has been contributing, it's only fair that whatever benefit that they've accrued or what they've earned up until that point is then provided to the spouse. So in this case, if an active member who has at least 10 years of service within the GEPF passes on, there'll be two benefits payable. There'll be a lump sum benefit, or it's actually three benefits, because there is a lump sum gratuity that is payable to the spouse. There's also a funeral benefit that is payable to the estate or to the spouse if they exist. And the surviving spouse will now receive a pension that is equal to the pension that would have been paid to the member if they had retired at that point in time. I hope that clarifies your question.
You know what? I want you to elaborate on guaranteed, using the very same example that we start with. Yeah, Emma. I'm a member. 5 years, I'm still earning the 30,000. I've chosen either benefits, whether 50, because I also want you to answer that one. What influences a person to use 50 as compared to 75? Why not 100%? But my first question, that's my second part of the question. My first question is, I want this guarantee to be clarified. 5 years, it ends. Yes, Saubrey still living the 6th year and so on. My wife is still there. I pass this on the 8th year. What's going to happen to the pension?
Okay, let me reiterate. I had tried to address it earlier. So let's assume someone is retired at age 60. So whatever pension they are getting is going to be guaranteed. So the surviving spouse is guaranteed to receive the full pension that the member was getting if death occurs within those 5 years. So if death occurs between age 60 and 65, it means that if I or Saubrey as a member was getting 30,000 as pension, for the remainder of those 5 years, the surviving spouse is going to get 30,000 as a pension. But once those 5 years elapses, it means that that guarantee falls off. And now the spouse gets either the 50% or the 75%, depending on what was specified on the nomination forms. And this guarantee only applies from retirement. So if you retired at age 62, it means it expires at age 67. If you retired at age 65, it means the guarantee expires at age 70. If you retired at 55, it expires at age 60, and so on. I hope that is clarified.
That is clarified. That is clarified. Now, the second part of it was what influences the 50 and the 75, why not 100%? But part of it, you have already answered it, to say in the guarantee period of 5 years, the spouse will get that 100% what I was getting.
Okay, thank you. I think it is an important question. And I think if we look at the standard practices in pension funds, and if I'm not mistaken, I think this is also influenced by what happens on the, let's say, in divorce cases as well. So why the 50% is chosen as a default? First of all, it is prescribed in the rules and is the standard prescription in most pension funds. And the understanding is that any household income would be split equally between the two spouses. I think that is the rationale for saying that the default is 50%. However, we do understand that, especially with the reduced income in retirement, you, as a member, you want what's best for your family, and you want to leave your legacy and to leave your spouses with a higher income or a better income once you pass on. Hence, we allowed for the option for you to increase the amount that continues to a surviving spouse to 75%. However, this is not a free option. If you're going to allow for your spouse to receive a higher pension, it means it has to be funded from somewhere. So either you reduce the pension that you get initially as the main member, or you reduce the gratuity lump sum that you'd get initially as a main member. So that's what I mean by saying that for your spouse to receive the 75%, you as the main member would sacrifice a portion of your benefits. I hope that clears up the question.
Thank you very much. I got it clearly. I hope my viewers got it clearly. One of the key issues with GPF, communication lines, the 0800 is not working. Brian, is not working. It rings forever, or you hold on for too long. Communication lines, that's one thing that needs to be sorted out by GPF. The other thing that I want to understand, you'll explain the processes as a member. Because you know what I want to clarify, Brian? People don't understand when things have blocked, whether they have blocked because of GPF or the employer or the member himself. Remember, the three parties can cause the blockage. The member may not submit the correct information or insufficient documentation. At the end of the day, they relax. Or something is happening at the employer side or at the GPF side. We are working with human beings, people, they work, it's work, they smoke breaks. There are so many smoke breaks, and that affects people who, on the other side, they are having assets which they may lose when people are busy taking smoke breaks. Now, I want the processes. I've applied either resignation or I'm going on pension. Where do the forms land? CRM. From CRM, where do they go? If there are legal issues, they go to legal. From there, they go where? SARS and all that. And what are the time frames? Now there are two questions. I've clouded it a little bit. There are two questions. One, communication lines. But that one I'm registering to you to say, I hope GEPF is going to address that one. So I want you to respond to that one. Communication line, the 0800 is not working. Your app, people are complaining about your app. You understand? So those are the issues that I want to clarify. Now, the processes, where do forms start? Where do they go? And so that people understand. And along those lines, there is this 60 days. When does this 60 days start? Does it start when a person resigns? Or, now I'm talking about resignation. Or does it start when it lands at GPF, a client get an SMS or a member get an SMS? Or does it start on the exit date? I resign, I submit my forms at the beginning of April, but my exit date is the end of April. When does the 60 days start? When is the 31 days starts? That within 31 days, I've not yet received the SMS, then it should ring the alarm bell according to GPF rules and the pension law. I want you to elaborate on that one.
Okay, so you've asked a couple of questions. So maybe let's go bit by bit, and then I'll try answer all parts of the question. But if I do leave something out, please just kindly refresh me so that I get to it. So let's start off with the one on the call center and the toll-free number. So unfortunately, we are experiencing a lot of challenges in terms of responding to our members on time through the call center. So we do own up to that. And just to possibly point a bit of perspective, in the past quarter, the quarter ending 31 December 2021, we're still waiting for the statistics for the quarter which just ended in March. But if we look at the one in December, in that quarter alone, we received 256,400 calls. So on average, we're receiving 85,000 calls a month. So these high volumes make it difficult for us to attend to everyone at the required time. We are, however, not making excuses. We are aware of this challenge, and we are in constant engagement with our administrator, the GPAA, and we're trying to assist them and devise different strategies on how we can address that. I think we've had different discussions on whether we can increase the capacity in the call centers and so on. I think the other important thing to highlight is that I think in your initial questions, you had mentioned that we have people from rural areas as well who struggle to get through. So I just like to highlight that this is a toll-free charge and members will not be charged no matter how long they wait. However, our intention is not to make them wait for long. And we are in constant engagement with our administrator to see how they can increase their capacity and improve the performance of the call center, because we do want our members to have a seamless experience. The next aspect, I think the other aspect relates to the self-service app or the self-service platform. Our intention when we set the self-service platform was to make things easier for our members. So we want members to be able to track their claims. So we have a track your claims facility, and our expectation or intention was for that to help reduce the call volumes. We are aware that the app is still fairly new, given that it's been in a year or so in existence. So there are teething issues, but we are constantly engaging with our IT departments, with our administrators to see how we can improve the feedback on the apps to make it more informative for our members so that they don't always have to call the call center. So we do acknowledge the problem. We are aware of these issues, but we are looking at ways of addressing that. So that is looking at the call center issue that you highlighted. You asked the second question, which related to the processes which are followed when a member submits a claim, as well as the respective timelines and when the 60 days also counts on, starts being counted.
Including, sorry, Brian, including the 31st day where the client does not get an SMS. So all those, when do they start?
Yes. So let me start off by defining what the GEP law says in terms of when a benefit is payable.
Good.
So according to the GEP law, once you exit as a member of the fund, that is when we start counting. So the 60 days comes from your date of exit. So if a member resigns on the 30th of April, 2022, the 60 days starts from that 1st of May, 2022. However, we were speaking of what is recognized in terms of the law. So this is the ideal situation. We now have to look at what is happening in practice and the practical challenges being faced by the administrator. And this will also touch on to your question of the processes that are followed. So let's work with a fictitious example. Let's say Saubrey works at a government department, which is and is part of the GEPF. So Saubrey has indicated that he's resigning or retiring at the end of the month. He has filled in all the necessary paperwork, the forms, and has submitted it to the HR department at his respective company. So part of the motivation for the 60 days was we implicitly allow for 30 days for the employer departments to go through their processes to fix all the paperwork so that they can submit to the administrator, being GPA, within 30 days. And then after those, in the next 30 days, it will now be the administrator going through its processes to finalize the payments. So let's look at an ideal case where everything works out perfectly and we have all the information that is required. So Saubrey has submitted his resignation forms, he has filled in all the paperwork, he's provided all the documentation that is required, his tax affairs are all in order. He goes to his HR department. The HR department, there's an HR person who fills in, who collates all this information and engages with what we refer to as the client liaison officer from the administrator. They go through the material, they see that everything that is required is correct. They submit the document through the platform and it gets accepted. Now, when it gets to the administrator side, there is a first round of checks that is done. There is a group or a team that looks through the information that has been received. They conduct a set of checks to see, okay, the information that has been provided now, is it tying up with what we have on the system? Are the dates of birth correct? Are they exactly what we have? If there are any queries, it gets sent back to the employer to verify. So for example, perhaps you have been registered as a male, but on the system it's a female. They go back and query that. Or the salary notch that you have been placed on is not tying to what was communicated previously. So that gets sent back. And depending with your internal processes of your company, the feedback can be quick. So now let's assume that everything is clean, there's no query that has been raised. It then moves on to the next process. And let's also assume that it's a small enough benefit, because if it is a very big benefit, I think above 2 million or so, there is a second round of checks just for quality control, because we want to ensure that we are paying the right person and that we're paying the correct amount, because it's very difficult to recover your payments if you have paid to the wrong person. So If it
Sorry,
is a
Brian.
small enough benefit, it goes
Sorry,
through the
Brian.
next approval process. It goes to.
So sorry, Brian.
Yes.
That first department where they verify.
Yes, I can hear you.
What is it called? The first department where they start to verify. What is it called? Is that CRM?
No. That's what the membership section.
The membership.
The membership team.
That it starts there. The forms, the claim form, they starts there.
Yes.
Okay, and then you'll also give me the time frames. You can do.
So remember, it also depends on the type of benefit and the. So it depends on the type of benefit, first of all, because remember, you can have other benefits that are more complicated, like divorces, where we then need to go through extra, or death benefits where extra investigations are required. So it's not sufficient just to have a form applied. Let's say for a death benefit, you need to trace the correct dependents and make sure that all the dependents who are due a benefit have been identified. So all these processes increase the time that is required. But what I was describing initially was we're looking at a perfect example where you have all your paperwork set up and everything is tying up to what is on the system. It is for a simple benefit like a retirement and resignation where there is no divorce proceeding, because for other type of benefits like divorces and death benefits, there are additional steps that are followed. And these additional steps lead to the extra time or lead to more time being required before you can finalize the claim.
All right.
So we've moved from the membership. If everything is correct and everything is verified, it goes on to the payment section, and they then verify your text. They get a text directive from SARS. If everything is in order and if it is provided and if there are no issues, and if your bank details have been verified, then a payment can be done. And this is what we are finding, especially for pensioners. You find that for members where we already have the information and they've already been receiving a pension, the pension benefits are being paid on time, 97% of the cases.
All right. Now, while you're still
where we have faced challenges, and this is where. Yes.
Okay. Yeah. I think our lines keep on breaking. You still want to say something, Brian? You're more than welcome.
I was just trying to highlight where potentially the system breaks down, where we start getting delays.
Okay.
So when you asked the question, you mentioned a relevant point that there are different parties involved when we're finalizing a claim. So there is the employer side. So if ever there are delays from the employer, it means by the time the administrator gets the information, there's already a delay. And sometimes that makes it difficult to make the payment within the 60 days. And we find this with certain departments where they have certain internal procedures where, I'm just throwing a random example. Let's say it's a service industry where if you have not returned all the equipment, they will not submit your claim. So if you're not returned the gun or whatever equipment is required, they will not submit the claim. So let's say you have already resigned, but you return your equipment a few weeks later. By the time it gets to the administrator, it's already late. So they're already behind the 60-day schedule. And that also contributes to part of the delays. Then we also have, unfortunately, sometimes members change their details and do not inform the administrator in time. So they've retired or they've resigned, they change their bank accounts, and they don't alert the administrator or they don't let the employer know in time. So now we'll be stuck in a case where the bank account is no longer functional. And when they do the checks for the bank details, it gets rejected. And then now they have to go and identify the member and get the new bank details. So all these processes and checks lead to a further delay. And also bear in mind that the GEPF is a big fund. So you get a lot of members resigning or retiring at a point in time. So all these checks have to be done for all these members. And any steps that are added just leads to further delays. And then you also get special cases where perhaps the member still has outstanding debt with the employer, and they have not yet settled or they've not yet agreed on a payment plan or on how that will be settled. Now the employers will not sign off on the exit process up until that is sorted. And this also leads to delay. However, this does not excuse the potential inefficiencies that also exist within the administrator. So there are cases where everything is in order, but due to either capacity issues or processes that are being followed that they're not as efficient as they should be, this also results in delays. But however, according to our statistics for the last 2 quarters, where we have the correct information, where the administrator has been able to pay the benefits in full within the 60 days of receiving that complete information. So we have, in 90% of the cases, from the point in which the administrator has received the complete and correct information, they've been able to pay within the 60-day period.
Okay.
So just to summarize my answer,
yes,
the 60 days starts being counted from the day you exit the fund. However, due to internal processes and also due to inefficiencies here and there from the administrator side, there can be delays. And whenever there's a delay, the fund is obligated to pay late payment interest on the benefit. So we try to make sure that a member is not prejudiced by delays.
Okay, thanks very much, Brian, for that information. Now, you say, according to pension law, 60 days start on the exit date.
Yes.
Now, I would like to know what you guys are encouraging when we are looking at administrative logistics. Because people are told that, no, take 3 months before you resign, submit your forms. And once you do that, you are raising the expectation on the member, all right? So that is why this has to be clarified, because a member will wait. Remember, these people are used to earn. He submitted, and then he's leaving end of April, but he's gonna start end of April, the 60 days. Then the client says, I've been waiting for 3 months. So I think that process should be managed properly. And while I'm still there, PCM is always offline, or most of the time is offline. And by that, it has an impact in terms of processing the information. By that time, the member is waiting. And I'm sure you know, as much as I know, that there are some members have passed on, still waiting for their benefits to be paid out. So I would like your comment as far as that is concerned.
Okay, let me start with the PCM issue. Though we do note that sometimes we have system challenges here and there, I'm not in agreement with the notion that the PCM system is down all the time. So if you look at the statistics over the past 2 quarters, 98% of the submissions have been through through PCM. This highlights how efficient and reliable the system is. So I'm not in agreement with the notion that that system is always down. I think it has been down, but those are specific instances. Sometimes it's due to SITA issues because we work on a SITA-based system, but it's not the norm.
You know what, Brian? Like you said, it's not a norm. I have a case in point where my client submitted her forms. When was this? The beginning of April? No, February, and he was leaving end of February. I can tell you that it took more than 3 weeks for PCM to communicate with his employer because there were problems. So I've seen it in my case. But when I was checking again this morning, they have already received. So when you say it's unusual, I'm saying it has already happened. So maybe you guys need to check the PCM and try to improve on the side of the PCM. It should be improved and be efficient, because as much as I've already indicated, remember in the process, people have policies, all right? Life cover policies, they lapse, all right? Or their car insurances, they also lapse. And then in the process, a person is involved in an accident. So the sooner those issues are addressed, like you said, the system cannot be perfect, but I think GEPF has to address a lot of issues because you are talking money here. You are talking the lives of the people. And I hear earlier on you said, Saubrey, we want the app is user friendly even for the people in the rural area. The most important thing is not about user friendly, it's about the time. The time is money. It's not about finally they'll respond to me. If I'm on the phone for 5 hours, they respond after 5 hours, they've wasted a lot of my time. So time is important. So on the part of time, I think the efficiency has to be improved. I don't know whether you agree with me or disagree on that one.
No, okay, you've raised a couple of points, but let me sum it up. Yes, we fully agree that what is ideal is for every member to be paid on time as expected. And what we are highlighting are actually the outliers. So if you look at the statistics of benefits being paid, we are able to pay our benefits on time and 85% of the time. Yes, we are aiming for 100, but for us to cover that gap for 15%, it needs to be a collaborative effort. So, and we are looking at different ways in which we can assist both the administrator and the employer on the employer side as well to speed up the processes. Because like I highlighted earlier, there are some issues that rise from the employer side, and it's not all employers, it's certain employer departments, and we're trying to find ways to work around it. And we are very sympathetic to our members. The fund exists for its members, and the sole purpose of this fund is to ensure that members get paid their benefits and the benefits that are due to them. So we are very sympathetic to that, and it is what keeps us up at night. We want to ensure that all our members retire with dignity and that they get paid their due benefits in time. So you did highlight the point of some of the members passing on before they've received their benefits. And I would like to reiterate again that it's something that we're very sympathetic to, but these are the special circumstances. It is not the norm. We're able to pay pension benefits on time, 85% of the time. And we're able to pay for the resignation and other benefits, in most cases, 85% on time. And where there are delays, it's due to the checks failing at some point, either from the employer side where they have different information from what has been provided previously, and then we undergo an investigation to verify the correct information, or cases where the tax affairs are not in order and we're not able to get a SARS directive, or other cases where especially on the death benefit cases, where further investigations have to be conducted to identify all the potential beneficiaries, or the legal proceedings that are still happening for divorce benefit payments. But I'm not making excuses. We sympathize with all the members where we do not pay their benefits on time, and we are always looking at ways of improving and ensuring that this gets corrected.
Brian, in parting words, as far as that is concerned, I'm going to make an appeal to say, send a message to GPF, they must improve the systems. I normally tell people and say, you know, when people say sorry after effect, it's so bad. You knock a person with a car and then he passed on, you say sorry, he's not going to wake up. So please let the system be improved going forward. Brian, you spoke about GPAA, which is your administration. Remember I said people don't understand what is GPF, what is GPAA, what is JPO. Can you just explain what is GPF? You have already explained what GPF, what is GPAA, because people out there, they don't understand. And what is JPO? I'm still gonna go there because there's also another JPO in the process. If you can explain the relationship between GPF and GPAA and explain what is GPAA for the benefit of our members.
Okay, there's also another party that I'll touch on, I think that is the PIC. So let me take a step back. So earlier on, I described what the GPF does and why it exists as an entity, and then the operation. So the GPF receives contributions on a monthly basis from its members. The GPF then passes on these contributions to the PIC, who's the investment manager, and invests these members' monies on behalf of the fund, with the intention of making sure that the funds grow to a sufficient amount and to ensure that there's enough assets to pay all the benefits that are promised. So one of the parties is our investment manager, which is the PIC. Then the GPF, so we have a GPF office, which is an oversight office or a trustee office. So this office itself, which is where I'm placed, we provide oversight on the investment function. So we provide oversight on the investment dealings which are done by PIC. Then we also provide oversight on the administration function, which is offered by the GPAA. So the GPAA or GPA is our administrator, and it's a service provider to the GEPF. So what we mean by administrator is they collect the contributions on behalf of the GEPF. They pass them on to the PIC. They're responsible for collecting all the member information and making all the benefit payments when required. So that is the administration function. And we as the GEPF office have oversight over that function. Then what used to happen was that there was no complaints handling mechanism. So if a GEPF member were in a dispute with the benefit that they've been paid, there was no alternative mechanism other than going through the courts. And the board realized that there was a shortfall in that regard. And then they decided to set up an internal ombuds office, which we refer to as the GEPO. This is the Government Employees Pensions Ombud. And the ombud is meant to be an independent body that looks at GEPF complaints, so not queries, but complaints and disputes relating to benefits. So queries are highlighted to the administrator, but the GEPO is an ombud which handles complaints and disputes in terms of the benefit payments.
Thank you very much for that explanation. Although I'm still going to explore further in terms of GEPO, but while they're still there, because I still want to go to GPAA. GEPO, since you said is an independent, because people were a little bit worried. I've already dealt with GEPO office because they use the same log as GEPF, and then even the emails, website. So you start understanding, are the lines blurred here or what? But you have just explained that is an independent ombudsman. Now, the determination that have been reached by GEPO, do you guys implement them? If there are implementation that took place before, can you give us examples of those issues that were implemented?
So where there is full, there is a memorandum of understanding between the GEPO as an office and the GPAA. So the determinations, if they're in full agreement with the administrator, they are being implemented. And there are examples of that. But due to POPIA, because we'll be releasing personal information, we cannot share the exact cases. But if you go on the GEPO website, I'm pretty sure there is a section where they include the statistics in terms of the determinations. Where there have been delays, it's mainly due to there's still further investigations that are being done by the administrator. So in certain cases, you find that the ombuds has given an instruction for the benefit to be paid, but it still needs to be investigated by the administrator to ensure that this has been the correct determination. Because for some cases, and I'll give examples of PDP cases where someone has queried what they refer to as the PDP benefit, but it's actually already been taken account of. The member has been credited with additional service. They have not been paid a lump sum amount, but that benefit that were due was already been used to credit them with additional service. So in that case, they wouldn't be due a benefit payment. Or in other cases, someone comes with a letter saying that they are due a certain benefit. But when we undertake the investigation and look at the records, we realize that they were not there on the original listing, or some of them were paid. And this is now another beneficiary who's coming up, and it is not clear whether they're actually entitled to this. So there are some issues in that regard. However, we have set up quarterly meetings with GEPO, and we've updated the memorandums of understanding to ensure that there are no blurred lines and that we communicate consistently in terms of the benefits.
All right. Are they going to get their clear identity in terms of the emails whereby we don't see? No, I know the email is info@gepo.co.za. But when you go to the logo of GEPO, you still see GPF logo. So I'm sure that will be addressed because it's a new office, of course. It's a new office. But while we are still there, GPAA, are you aware of the shortage of personnel at GPAA? I'll tell you why. I've gone there many times myself at GPA. People are telling me about the shortage. And I've dealt with GPA for some time. At some point before GEPF was in existence, I had to take your office to the public protector because things were not happening. So it's not that issues have not been there. They've been there. What I talk about, I've experienced myself. That is why I'm saying when you arrive at GPA, people tell us, no, we are short-staffed, and you can see that they are short-staffed. And then because when you talk to them, say, no, the person who's working with this file is not here today. The question is why the person leaves the office? Because if the person leaves, somebody must take over. So I don't know whether you are aware of the shortage of the GPA. If you are not aware, what you guys are going to do about it?
So we are
No,
aware.
if you're not aware, well, I'm making you aware now. If you are aware, what are you going to do about it?
So we are aware of the challenges, but before I go on to explain what we can do, and I think I need to expand on the relationship. So the GPAA is a separate company and legal entity, which reports to National Treasury. So there are limitations in terms of what the GPF as an office can dictate. So we have raised our concerns with the senior management and the board for GPAA, and we're in constant discussions with them to see how best they can tackle their challenges. So their challenges can only be addressed by National Treasury and by the relevant government departments in terms of addressing the staffing shortages. It cannot be the GEPF office because we do not have the jurisdiction over them. However, given all of this, we are looking at ways of addressing some of these issues. So the position that I currently hold did not exist 18 months ago. And this department was set up so that we can look at different ways in which we can start improving the efficiency of GPA with its own resources, and how we can also assist with modernizing some of the processes so that the cases move quicker. So those are some of the actions that we are taking, but I just wanted to highlight that there are limitations given that it is a separate legal entity which reports directly to National Treasury. So we cannot dictate. So whether we can suggest solutions, we can motivate for solutions, but we cannot dictate what they implement.
So in other words, in short, if as a member, I have a problem with GPA, so I need to complain with the Treasury. That's what you're saying. I don't have to raise the matter of GPF.
No, the matter can still come through to us, and we will do our best to make sure that it's addressed swiftly. However, we just want you to be aware or to understand that it is a separate legal entity.
As that. Now, I know, GPF, I don't know, maybe you can respond to this or not. I don't know whether you are aware that there are a lot of unclaimed benefits. People talk about that. And then what does GPF? What are you going to do about it? A lot of people there is huge money that is unclaimed. And then what action is going to be taken by GPF as far as this is concerned?
Okay, thank you for bringing that up. That is actually an industry-wide problem. And I think before I go into the specifics of my answer, I think we need to go back to the basics. I'm sure you will agree with me that if you as a member know that you have a benefit that you're entitled to, and you're genuinely entitled to this benefit, and if it has not been paid, you would follow up and you duly get paid. All right. So now when it comes to unclaimed, we are in it's a special case where either the beneficiary, for some reason, they're not coming up, and it's difficult to locate them. And this usually happens for cases from a long time ago, where they retired a long time ago. Some of them have passed on, but they were never paid, or they never instituted their claim in time. And now we have to trace these beneficiaries. We've also identified that there are fewer cases where the benefits are unclaimed because there is a dispute between the member and the employer. So maybe it's a dismissal case which they are disputing. So they've not yet submitted their forms up until they've sorted that case. So those ones are easy because we are aware of who they are, but we cannot pay them out up until they initiate the claim. Then we also have cases where, for some reason, the bank accounts have been rejected, so they no longer exist. So this member has either changed the bank accounts, or they provided incorrect details initially. And for these ones, we are in the processes of tracing these members. We're working closely with community leaders, different tribal leaders in the rural areas, to be able to identify all the beneficiaries. And we're using tracing agents. We even set up an unclaimed benefit strategy, and the tracing department is being set up at the GPAA to assist with locating all these beneficiaries. So what I would like to assure you is that we are aware of unclaimed benefits, and we're implementing processes to try trace all the beneficiaries. And once we have traced them and found them, they will be duly paid their benefits. And I'd also like to reiterate that they are unclaimed for a reason. It's because they're actually difficult to trace. Once we have a member and we know who they are and where they are, and we have the correct details, we pay them. So the fund is not holding on to these funds for the sake of it. We are in the process of tracing them, and the intention is to reduce these benefits. And what you'll notice if you look at the annual reports is that there are unclaimed benefits which we have been paying regularly throughout the years. However, each year the balance increases because there are new unclaimed. So it's almost a moving target, but we are trying to address it. And then there's the long-standing issues, which is the harder ones, which I said are those from the long time ago, where we're trying to trace all the beneficiaries. Some are not even in the country. Some are minors who are migrants from other SADC countries. And we're in the process of tracing them. That's why you find that the GEPF is advertising and trying to send out listings and sending out all this information, requesting for beneficiaries who are aware to come up.
Okay, thank you very much for that explanation. While we are still there, the other question that I would like to ask you is this: the PDP issue. Why is the GPA or the GEPA, as you say, always sending a spreadsheet to actuaries when all was completed by the National Treasury and PSCBS?
Okay, so I don't think that is quite correct. So remember, what was agreed upon was initial amounts or initial funding.
Yeah.
And then what then happens is when a member leaves at a future point in time, we need to take account of the time value of money and any unearned interest, as well as any changes in the salaries that they might have. So at each point in time, the value needs to be recalculated. And that's why we need the involvement of the external actuaries to calculate the up-to-date benefit. So it's not a process to delay or to frustrate the process. It's actually to update the value so that the member gets paid the correct benefit.
Look, the purpose of the question is to you to clarify there. People are just asking questions. I'm just asking what people are having in mind. So this is an opportunity for you to clarify so that people understand that, oh, this is happening because of this and that. Now,
so maybe just to add to that, it's not only important to pay the beneficiaries, it's important to pay them their correct benefit. And that's why we go through some of these processes to ensure that the correct benefit is paid to the member. Because we exist here for our members, and our intention is to pay them their correct benefits on time.
Brian, the other thing that I would like to know from you is this. When people resign, because I get this question all the time, they have their days, leave days. If you can tell us, are they getting paid for those leave days or they just forfeit them?
Okay, thank you for bringing up that question. And I think this platform gives me an opportunity to clarify certain things. So we need to distinguish between employee or employer benefits and fund benefits. So let's start off with the fund benefits. So when you contribute to the GEPF, you are entitled to a pension fund when you retire, or a lump sum when you resign, or a lump sum and pension when you unfortunately pass on. So these are the pension fund benefits. These are the benefits paid by the GEPF. Leave benefits, these are benefits that are accrued due to your contract between you and the employer. It is not a fund benefit. So any outstanding leave days, those have to be paid by the employer. Similarly, the post-retirement medical aid subsidies, these are employer benefit, and they have to be paid by the employer. even though they are administered by the GPAA, it is an employer benefit and not a fund benefit. So the leave days, unfortunately, that is not a responsibility of the GEPF. And that is something that can only be clarified by the respective employers.
Okay. So in other words, if the client or the member wants to know about the benefits of leave days, the member must go to the employer.
Yes, they should go to their respective HR departments within their employer, because that is an employee benefit.
Okay, so that's the correct position to follow. Now, the former Minister of Finance, the Honorable Mr. Tito Mboweni, once said the government is working on a program of allowing people to borrow from GPF to settle their bad debts. Is this a correct understanding? If not, give us the correct position on this one.
Unfortunately, you're not correct in that regard, Saubrey. So let me, before I delve directly into answering your specific question, first point I'd like to point out is that the GEPF is governed by the GEP law and is not governed by the Pension Funds Act. The Pension Funds Act governs all other private sector pension funds. The GEPF has a specific law, which is called the GEP law. Now, moving on to what the Honorable Minister or former Minister said, what he allowed for was the possibility of setting up a two-pot system, which would allow members of private pension funds to have early access to their pension savings without having to leave the fund first. And the intention was to provide immediate relief and to provide them with additional income in difficult circumstances, and not necessarily to settle bad debts. But what is important to highlight was that this was going to be subject to certain limitations and was only opened up for private pension funds. This was never extended to the GEPF. Hence why we have not commented or we have not yet held a position on this.
Okay. It's well understood. Let me just clarify. Brian, when I ask question, it's not me per se. It's the public out there. Because I'm asking what they have in mind. And then just give us the position so that they can have a clear understanding of, how, because what is important, Brian, as I said, is for people to understand, where do they start, what is happening, and all that. Yeah, before I leave, because I'm gonna leave now, I want to say to you, remember I asked, what would be your advice to a member? All right, he wants to leave end of the year. Is he supposed to submit her claim forms at the beginning of that particular month or on the day of exit? Because that one doesn't come out clear, because you say the 60 days starts on the day of exit, which also means that that 1 day is where he's supposed to get an SMS, starts on the exit date. But the member, they've been told that no, 30 days before you leave, submit your claims.
Okay, so the couple of
so that understanding is quite clear. The member understand that, okay, if I submit now, the beginning of April, all right? Remember, I'm dealing with expectation here, and you are also dealing with expectation. That's what we want to manage. So just come out clear as far as that is concerned.
Okay, so this advice applies to all members, even those who are not yet reaching a point where they are about to retire or to leave the fund. So first and foremost, we encourage our members to always keep their information up to date. So if they've changed their cell phone numbers, let the employer and fund know. If you've changed your bank details, update the fund. If any details regarding beneficiaries has changed, let the fund know so that on the systems and at hand, we have the correct information. That process in itself eliminates some of the delays that comes up. And this applies to all the members, whether they are ready to leave the fund or whether they're still continuing within the fund. And for those who are close to retirement, what we've found works is ensuring that all the paperwork is ready in advance. So even 2 or 3 months in advance. Make sure that your tax affairs are in order, that we can get a tax directive from SARS, so all your tax issues are sorted. We want to ensure that you have all your identity documents, you have the copies as required, you have certified them as required. We check with your employer that they have the correct. You can even request from your employer the historic salary information. Make sure that it ties up with what you have on your payslips previously. Once we have the correct information, and once the administrator receives the correct information on time, we are able to pay you within the stipulated timelines. So my advice is to ensure that, first of all, you do your part. You ensure that all your affairs are in order, all your documents are available. Second one is to assist us to keep the employers accountable. So check with them that they have the correct information. When they submit the documents, ask for copies to make sure that everything that is included there is the same as what you provided to them. This will help reduce the delays. We will also do our part and ensure that our systems become more efficient.
Brian, one of the R words, it's responsibility. So what I like, you are encouraging responsibility among all stakeholders. It is not the duty of GEPF only or the duty of the employer. Me as the member, I should also take my part of my bargain. Like what you said, 3 months before, just check everything is in order. Check with your tax, they still have all documents in order, and then the forms that need to be submitted. So you must keep everybody on toes. You should not be, always shooting with one finger pointing at GEPF, but the 4 fingers are pointing at you, or the 3 fingers are pointing at you. I like that one. That's one of the big R words, which is responsibility. Everybody must take responsibility. One of the issues that I would like you to comment about, this is going to be the last one as a question to you, is the issue of, can you elaborate on medical unfit? What is happening there? Because we hear so many things about medical unfit. Just explain what is the situation there. Because I have a typical example that I experienced. Sorry. I have a typical example that I experienced with one of my clients. So that is why I want you to clarify that position. What is the position on retirement unfit or medical unfit?
So I'm assuming you mean the ill health retirement. So if someone is forced to stop working and go into retirement because they're no longer physically able, or they've been regarded not medically fit to continue working.
Yeah.
So this is regarded as ill health retirement and is prescribed for in the rules. So if you go on ill health retirement, you're entitled to a pension benefit as well as a gratuity lump sum. And the specific benefits are specified, or the specific formulas are included in the rules. And then what it entitles you is you get a lump sum when you go on this retirement, and then you start receiving a pension that is payable for life. This pension is also subject to that 5-year guarantee that we spoke about earlier. And then if you pass on, the pension payment will continue to a surviving spouse, but at a reduced rate, and will also continue to your child pensioners up until the maximum age, and it's currently 22.
Currently 22. I want you to come out clear here. As I said, I've got a practical example. I know you're not specific, but this helps because it answers for a lot of people. I had a client, the member was paraplegic, all right? And
sorry, Aubrey, I lost you for a bit there. Do you mind repeating? I lost you at the point where you were saying specifics. So do you just mind repeating your question? Sorry about that.
Yeah, I see the internet is not stable. I don't know whether it's on my side or on your side. Hopefully it's not on my side, but it's not stable.
We'll blame ESCOM for this one.
The easy target. Now, let me put it this. I was saying to you, Brian, on this one, I have a specific example, all right? I know that we are not talking about specifics, but that specific addresses issues of many. I had a client, not specifically for financial services. It was clients for debt counseling. Fortunately, I also do debt counseling. And when they came here, the member had already taken early retirement. And the 5 years guarantee that you are talking about. And then they were here with the wife. I was helping them with debt counseling, nothing to do with financial services. And then the 6th year, the husband was still alive. Then he passed on by the end of the 6th year. Unfortunately, it's a very sad story. The client also stopped paying. Remember, on debt, you have credit life. A credit life which allows you that when the main member passes on, then the credit life will pay. They stop paying, all right? Maybe due to financial difficulties and so on. But that was not indicated to me until when I picked up that the client has passed on. Now, when the client went to the creditors, they said, no, the money is gone because 5 years guarantee is over. So hence I'm asking you because I want to come up. And then I say, what are you telling me? Do you understand?
Okay, I'm not sure I completely follow. Who was the credit life policy?
Okay.
Because the GPF does not
no.
provide payment.
Yeah, GPS does not deal with credit life. Now, here is a position. The client, the member of GPF, was under debt review.
Okay.
All right. Now they were married in community of property. All right. Now the member lived for 5, 6 years. Towards the end of the 6th year, in August to be precise, he passed on. But unfortunately, they were not paying the credits anymore, which included the credit life. And that made credit life to lapse. Now, the surviving spouse had a hope that GPF will come handy. And then when she went to they said, no, you're not going to get it. Not GPF, for instance. She went to, sorry about that, she went to one of the creditors. The creditors said, no, you are responsible now. That one has fall off. That is why I want to comment as far as that is concerned.
Okay, so
that example, as an example, not a specific case.
So are we saying that the spouse did not receive the pension after the member died? Is that the issue?
No, the member was earning, okay, the spouse, remember, was there. They were earning for the 5 years, then the 6th year, the member passed on. Then the member, the surviving spouse was told that she's not getting anything.
From the GEPF. So she was not going to receive the reduced pension.
The reduced pension or whatever. That is why I say one clarity as far as that is concerned, because I've been communicated with that member for a very long time, because when she looked at paid up, it could not be paid up because the credit life were not there. And then I'm not sure about the GPF, what happened as far as that is concerned. So that is why I want to clarity as far as what is happening in that case.
So let's go a step back. So the GPF is responsible for paying the pension benefits. So what was supposed to happen? If the spouse was a registered and recognized spouse, then they were supposed to receive a reduced pension from the point where the main member passed on. So from that August or September, they were supposed to be receiving a reduced pension. Sometimes there could be a delay, so they would get they'll probably only get paid in October because they'd have to verify that the spouse and so on, but they'll get the full amount with interest. So I'm not sure why the spouse was not paid. I think it's very difficult without getting the specifics of the thing. And maybe offline you can share the details so that we look into it. But according to the rules, as long as it is a registered spouse and a legitimate spouse, they are entitled to this pension benefit, and they're supposed to be.
To continue to benefit. Okay, fine. I'll follow up. I'll follow up privately, and then because and find out how far is that is concerned. Because as far as the creditors, they could not help due to credit life, but I want to find out GPF. So in other words, you are saying if the member has passed on, the spouse will continue to benefit irrespective
from the pension, yes.
Yeah, from the pension.
Yes, so it goes back to our example of that 30,000 that we used initially.
Yeah.
So if the member passed on, the spouse was supposed to receive 15,000 going forward up until the spouse passes on.
No, the spouse has passed on now.
It's the spouse that is passed on, not the main member.
No, the main member is passed on. That's what I want to say. What about the spouse now? The spouse
is supposed to receive the reduced pension up until she passes on.
Oh, no, that's fine. You have answered my question, because that's what I wanted to find out. I'll follow up with the spouse and find out whether she's getting something. If nothing is happening, I'll share it with you. And then let's see how can we help, because I'm not definitely certain what's happening. I wanted clarity as far as that is concerned, because there are many issues and variables that you get out here. And variables that you get out, they're not real. That is why I wanted to ask you guys questions. Now, before I leave, I'm going to ask you, because you mentioned PIC, we've always been trying to want to know, what does PIC do? Because we see PIC in the papers and the media, we don't know what do they do, what animal is that. I know that you are not working with them. If you can pass me the contact so that we can also contact them and interview them and learn what do they do, just like we did with GPF. The same with GPAA, or you are speaking on behalf of GPAA. We have done GEPO already, so there's no need for us to deal with GEPO. So, yeah.
So the PIC is our investment manager. Okay. So the contributions that are collected from the members and the employers are passed on to the PIC, and then the PIC invests those contributions into different assets. So they buy shares of different companies, they invest it in different bonds, they buy properties, and the members then benefit from the increase in the rental values of those properties and the increase in the actual value of those properties. They also invest in other exotic type of instruments, so different derivatives and so on. And the intention is for them to invest this money so that they grow and earn returns on behalf of the members. Yeah. So that's the function that the PIC is serving for us. They are our investment manager. We pass on the contributions to them. They then invest these contributions in a way that is consistent with our what we refer to as our strategic asset allocation, or the allocation that will ensure that the fund earns enough returns to be able to pay all the benefits that are promised to its members.
No, what I was saying, will you make it possible that we interview them independently?
We can share offline. I'm pretty sure we will.
Unlike you,
we can talk offline and then we'll share the details.
Yeah, I'll appreciate, because you know why I'm saying this. We have heard so many stories. Companies go to PIC and borrow money. So we want to know who are those who are going and borrow money. And then people understand. Remember, it's an entity that is making money, like you're saying, they're investing. So we need to understand who can go there and borrow money, make loan, not borrow money, make loan from PIC and so on. So I'll talk to you. And then JEPA, can we also talk about JEPA, or are they, you'll be talking on their behalf, or should we talk to them separately?
So strictly speaking, I think I've covered on their behalf as well. However, I think offline we can always chat and see if a separate discussion can be set up.
No, that's fine. JEPA is not a main issue for me now. PIC, I would definitely love to interview PIC. Brian, I really appreciate your time. And thank you very much to you. And then thank you to Mr. Musa Mapesa. And then Mrs. Is it Miss or Mr. Selepe?
Yes, it's Miss Selepe.
It's Miss Selepe. And all those people who facilitated that we have this discussion. This discussion is very important, and people need to understand and know what is happening. You were very good in answering the question. Then I'll hear what questions do I get after that, and then probably I'll call you again and say, Brian, can we make a follow-up and answer these questions? All right? because we want
Okay.
them to get clarity. So thank you very much. I really appreciate it.
No, thank you very much. And thank you for providing us this platform to give our members clarity and assurance. And like you said, I think the important thing is for us to take responsibility on our side there are a lot of issues that you've highlighted, and I'll personally make sure that we do our job and look at some of these aspects and ensure that they're addressed so that our members benefit and get the best experience.
Thank you. We'll also encourage members to do their part, because our job is to educate people to also take responsibility, not unlike always blaming instead of doing things themselves. I really appreciate it. And then Brian, they never shared your contact, because if I had your mobile number, I would share this interview via WhatsApp quickly so that you see it, what's happening. It's gonna go live at 6. If I succeed,
due to Popia, we do not share our
no,
details,
you share with me privately if you want to.
Yeah, but then in terms of a Popia compliant address, you can send to inquiries@gepf.co.za. I have access to that, and any queries that come through there, I'll ensure that they get addressed.
Thank you very much. We will put that number again,
inquiry@gepf.co.za.
Okay, we'll put it so that people understand where to ask questions. Brian, thank you very much. Let's keep in touch. I'll drop you an email after this interview.
Okay, thank you very much, Saubrey. Enjoy the rest of the day, and thank you to our viewers as well.
Thank you, much appreciated.
Okay, bye.